Hey everyone, hopefully you're having a good day. Again, this is Andy. My channel's Finding Value, and I'm going to talk about inflation versus deflation. I know in the comments, and I know a lot of people, they worry a lot about inflation versus deflation, how to position, what's going to win. And I take a pretty easy approach to it. Mine's very simple. I just look at some charts, look at some data, and then make a conclusion. I don't try to dig and sift through all the minutia, so to speak, I guess. I don't try to make up a narrative. I don't try to really do anything that's that advanced. I just look at like inflation and say, okay, how much deflation have we had since 1970 going off the gold standard? How what does the M2 money supply look like? What does housing or real estate look like? And we're going to look at all that. But most of this stuff, I guess I just take a pretty straightforward, easy approach. At least that's what I think. I don't think we're going to have deflation. I don't think we can have deflation. I think they're going to send checks to everyone, which they've already done. And they've said that they're not going to have deflation. So I'm going to believe them. Now, let's take a look at history and see how well we've had inflation versus deflation since 1971, going off the gold standard. So let's take a look. I've got some data here to show you guys whether we're going to have inflation or deflation, in my opinions. So you're going to lose me, and I want to go straight into the presentation I have for charting. This is the M2 money supply growth versus inflation. M2 is the black line, and the red line is inflation. We've got 1971, it's a little bit to the right, but somewhere in this region is where we've gone off the gold standard. So 1971, we went off the gold standard. So before that, we've had these massive deflation, inflation swings where the M2 money supply went below, we've had lower inflation, and this is really the raw market back here. This is a gold-backed currency market as well. So before 1971, looking to the left, we had inflation, deflation. We had the cycle, and more than likely, all this is the real estate cycle going up and down. That's all it is. Looking on the right-hand side of 1971, I just see so much deflation to worry about. The green line is at the zero inflation deflation line. That's the neutral line. And we had one little blip in 08 and 09 that came right above it. And that was it. This one little blip is what everyone's, I guess, worrying about. That we could potentially have a blip of this little thing. And I'm looking on the right-hand side and the response of all the money printing. And remember, we're in an expansion phase of real estate. Expansion phase is inflationary. And that's why I think we are moving on higher here. We are going to see greater rates of inflation. They sent checks out. I think we're going to be in an inflationary period. But what you're worrying about, what everyone's worrying about with the deflation argument, hasn't really happened since 1971. There is no deflation since 1971 outside of this little blip. And it was very short-lived if you were going to have it. So the question is, do you worry about the short-term blip or do you worry about the structural changes? How do you want to position your portfolio? Do you put it in the undervalued assets and just ride through it? I mean, that's what I'm doing. Or do you worry about something that hasn't really existed since 1971 going off the gold standard? That's the decision that you have to make. Now, we've got this red line. They're claiming that this thing is declining, and we're getting less and less inflation. Yeah, that's a bunch of hot air. I don't believe that. There's no way that we have inflation rates that are hugging 0 or 1%. In 1999, when I started driving, gas was like 25% of the price it is today on premium. And on regular, it's probably 30% or something like that, or 25 to 30%. That's massive inflation. Don't give me. We do not have 1-2% inflation. There's no way. I'm sorry, I don't believe it. Now, this is the inflation rate that Shadow Stats puts out, this is the 1980 base calculation. We've been at 10% inflation. All those guys, I don't know what they're looking at. I know you guys are reading like Lacey Hunt and Van Meter and all these guys. I mean, I don't know what they're looking at. I don't know what prices they're looking at. And I'm not trying to say that they're necessarily wrong. It's just, I must be living a life that's different than all of them. I must be buying different things. I must be filling up a car with gas. Maybe they have electric vehicles and they aren't looking at the gas price. I don't know what they're looking at. But I would believe this 1980 based calculation to be probably somewhat accurate. And I would guess it is between 5 and 10% would be a good guess if I were to just guess. Everything I buy seems to be shrinking faster than anything. I used to buy toothpaste and it was like literally like 10 ounces back in the day and it was like half the price. Now I'm buying like 6-ounce tubes and the price keeps going up. I'm like, I mean, on a per ounce basis, I'm seeing massive inflation. There's no way it's 1 or 2%, not even close. They're smoking the ganja. That's what they're doing. Now, inflation, this is the definition they have, is a persistent increase in the level of consumer prices or a persistent decline in the purchasing power of money. I view it as the latter, a persistent decline in the purchasing power of money, caused by an increase in available currency and credit beyond the proportion of available goods and services. The market itself wants to deflate prices. That's what efficiency gains us. If we're more efficient at producing something and we produce more of it, we scale it up, prices naturally decline. The system is naturally deflationary in terms of the pricing. The way that they give the definition is it's naturally deflationary in terms of prices. The way that I view it is inflation is the increase in money supply, deflation is the decrease in money supply. That's the way I view it. But they viewed it just like I explained in terms of prices. Now I'm gonna show you something. I'm gonna show you a couple of charts and why I don't care if it's inflation or deflation. Doesn't really matter to me. On the short term. On the long term, I think we're right. Now, here's the CRB index versus the S&P 500. We broke the downtrend line of this big, huge downtrend, and we're at 0.05. If we look at a big long-term perspective here, 0.05 is hugging the zero line. We've never been this cheap in relationship to stocks, commodities that is, ever. Ever. And if you had purchased in these green circle areas, you would be a multi-millionaire putting hardly any money into it every single time this reversed higher. You just had to wait from 70 to 73, 74. This was a violent move. We had a big move from undervaluation to overvalued, 99 to 2008. That's a 9-year move. So here's we'll call it, I would have probably been buying back here, 69 to 73. So this is a 4 or 5 year move, and this is a 9-year move. And this one, the housing market, it was kind of coming back, but it re-shot up higher from the late 80s to early 90s. And I'm going to show you that later, what that looks like. But right here, I mean, commodities they're like free. They've never been this cheap in relationship to the S&P 500 ever. 0.05. Guys, look at this. I mean, 0.05. This is ridiculous. All that money got chased into stocks. And why did it get chased into stocks? Everyone should know that answer. Because the real estate market was in a recovery phase. They printed money, probably gave it into the banks. The banks had nothing else to do with it, so they just piled it all into stocks and investments. And now we have got the largest bubble. They're going to have to try to unwind all this. So valuation-wise, commodities have never been this cheap, not even in a long shot, and it broke its downtrend. That is saying that it needs attention by investors. Now here's platinum. I'm going to give you an example here. The red, the square here, is the housing expansion phase of real estate. I just duplicated this and watch this. Oh, wow, it's another real estate boom that happened right there. Huh, funny, it was the same duration too. That's really weird that these durations are roughly the same. How long is this duration? About 10 years, 9 or 10 years. I am proposing that over the next 9 or 10 years, we are going to see a big move higher, and I'll show you why I think that. But this is a monetary phenomena. It has nothing to do with supply and demand of particular commodities. It has everything to do with money rotation, inflation, and interest rates. Nothing to do with supply and demand. Well, I mean, there is supply and demand, but everything, it's more about money flows than anything. How money flows from one asset to another. This is a very large move from 70 to 80, another large move from 98 to 2008, about 10-year moves. And then we've got these nice big consolidation patterns in between. We have a nice big consolidation pattern happening, right? And here's the thing. I know you guys are worried about news. You're worried about events that are happening. How big was the COVID event? That was probably the biggest event that you could possibly think of. And what happened to platinum? It came down and went right back up. It didn't affect the underlying fundamental conditions for any of these commodities or for stocks. Nothing happened. They just printed a bunch of money. So you guys, if we do have a deflationary scare, it's probably going to be short-lived, and it has to be far greater than COVID. Is it going to be far greater than COVID, than shutting down the entire economy for 2 months? Are we going to have a worse off scenario than that? Because COVID produced this, and now they're putting the pedal to the metal of money printing. This is coming right back up, or maybe we come back and do a little back test or something, and then we just fly higher. I don't know what the necessarily is going to look like, but I think we're gonna break out of this. I think that we are going to create another red triangle right here, and I'll show you why I think that, looking at the housing starts in an expansionary phase of real estate. But that COVID didn't do anything. Here's oil, and there's the COVID crisis. Again, oil exhibits the same thing as platinum. Those two red circles from 70 to 80 went way up, and from 98 to 2008, you would have rode oil all the way up just on both of these things. What's the probability of oil, platinum, silver, gold, uranium also follows this mix in here too. What's the probability that all of these have supply and demand problems all at the same time? I would say it's pretty much zero, that there's another factor factoring into the moves. And in my opinion, the factor is real estate, inflation, and interest rates, and the rotation of money between assets. That is my thesis and proposal. And here's COVID. Again, COVID obviously provided a great buying opportunity, but if you had held through it, you'd be making money, and we're about to break out to the upside of this very large pattern. And it's going to go far higher than what most people probably think. Here is the housing starts, those red boxes. This is the amount of time above so the red line's the yearly average of the demand for new homes. Whenever we go above the yearly average demand, we are in an expansion phase of real estate. These were two massive moves in the 70s, and this is the dip in gold. There's your dip right here. When it comes down below, it dipped in like 74 to 76 probably. 74 to 77, 74 to 76. That's your dip. If you correlate it back, this is your dip here. It's the dip right there. That is the dip that you saw correlated to housing starts. It happened in gold, happened in silver, happened in platinum, happened in probably oil. Oil went right through it. That's a nice little move there. But there's your dip. And if we look, we had an expansionary phase here. We had one here. And if you correlate that back, I want to show you guys this stuff. Let's look at this. Sorry there. This is roughly, it came up in 83, 4, all the way to about 90. It kind of went below it. So this is it right here. We were coming down and it said, nope, we were going into an expansion phase. It reversed and went all the way back up to 90. 90 is right when it started coming back down. This is our leading indicator. Here's the other boom, 98 all the way to 2008 when it went below the average. So it's from above average to below average, above average to below average. That's what I'm looking for. And what are we doing over here? We're going into an expansion phase. We're seeing the underbuilt scenario of 3.8 million homes that were underbuilt. This is going to be inflationary. We're going and going to have to build those 3.8 million homes above this yearly demand and create probably something that looks similar to this or larger, because this is a very large area under the curve all through here, which means I think we're going to have to build it above. That area under the curve has to go above the yearly average with the millennials coming for the demographics. So the way that I view this is the stars are aligned. I mean, this is where I'm going big. I'm ready to go big here. I see the writing on the wall. The stars are all in alignment, and this very rarely happens. And it might take some time to play out. I'm not saying it's going to be overnight, but worrying about deflation, we haven't really had large amounts of deflation after we went off the gold standard. So I don't know what you guys are worried about necessarily. We had a crash which shut down the entire economy for 2 months. I showed you here that we bounced back very quickly, and the structural move, the underlying structural fundamentals for commodities are all in check. So I don't know what bigger event than COVID can happen to throw this all out of the mix. This is structural, it's demographic, and in my opinion, it's going to have to happen. And we're breaking these patterns that are 10 years plus in length. I think it's inevitable. It has to happen. The market has to rebalance itself. It's out of whack. And we've never been this out of whack for commodities to the downside in terms of valuations. Therefore, if the housing market's never been this out of whack and the commodity cycle's never been this out of whack, I think it's the largest opportunity that I've ever seen. So if you guys like this, if you have any comments, please put it below. Let me know what you think. Give me a thumbs up if you like this content, and thank you for listening. This is Finding Value.